So welcome to The Real Build. I am your host, Bill Ryman, your broker builder. And today I have a guest coming from Orange County, California. She is a real estate professional, entrepreneur, investor, and podcast host offering outstanding qualifications from extensive work experience. Knowledgeable in real estate, residential real estate, specialized assets, distressed property, short sale, pre-foreclosure and foreclosure, and mortgage lending with a proven abilities in sales, lead generation, acquisitions, and relationship management. That was a mouthful. She is she is armed with exceptional interpersonal skills and building strong rapport with colleagues and professionals of all levels. She believes that what you put out into the world comes back. I'm a big believer in that too. In addition to her professional career in real estate, her passion is to be of service to others, and that is carried out through her volunteer work and sharing inspirational stories on her podcast, 8 Billion. Great podcast. Go check that out. I got the opportunity to be on it. Liza Florida, welcome to The Real Build. I'm happy to have you on. How you doing today?
I'm doing well. Thank you, Bill. Thanks for actually having me in exchange for you being you being on 8 billion just a few weeks ago. Actually, that podcast is going to be coming out in about a couple of weeks. So
Yeah. Like after our conversation, I had to have you on because me and you actually after your show started hitting some topics too that actually will benefit my show. One of them being kind of you specialize in the short sale pre-foreclosure foreclosure arena. We kind of discussed this prior to. We have a lot of people we're dealing with in the real estate world right now, a lot of people buying low inventory situations. So this is going to be a great discussion. I'm happy to have you on today, but I always like to get started with you talking about who you are, your background. So who is Liza Florida?
well, thank you, Bill, for the wonderful introduction. It's always so nice to get introduced on all different levels and share, I was like, wow, I actually did that.
Yeah.
But yes, everyone, hello, audience. My name is Liza Florida. I am a residential real estate expert and specialist coming from Orange County, California. I've been in real estate for 22 years. It is a real estate family-owned boutique firm, currently owned by me and my siblings. And but like I said, there is so much to know about me, but that would be my professional background. A big part of what I do now too is I have a podcast called 8 Billion. It is a passion project that shares inspirational stories because I am a big believer in personal development and spiritual growth. I believe that becomes the fuel to anything for anyone to inspire them to do really well in their career and their personal life and their family life and all around together. So if that in a general sense helps out, I'm happy to give that as an introduction to myself. If you want to know more details, I'm happy to give that as well. I'm a single mom actually from Southern for a 16-year-old son. And that's been quite a journey in and of itself, but it's a very fulfilling one. It's taught me so much as an individual and as a strong woman to, kind of be able to use everything that I've learned in personal development and also try and teach it to my son at such an early age. I also, in my career in real estate, I have taught, because we specialize in short sales, pre-foreclosure, or distressed management assets. I've taught on those levels. We were real estate specialists, or we represented 6 banks from 2008 to 2013. Some of them being Bank of America, which was formerly Countrywide. It turned into Bank of America. Wells Fargo was another bank, Old Republic, and so on and so forth. You can look those up in LinkedIn. And again, like I'm happy to share any of, my, expanded expertise to anyone that wants to know more details about any of the banks that we represented.
Well, you definitely have a lot of expertise, and that's why I'm happy to have you on today, too, just because you specialize in so many things. Obviously, that was a mouthful on the intro, too. So, no, I'm really happy to have you on. I mean, one thing I'll hit on, too, like we talked about, this more open conversation, is how important the personal development journey is in all aspects of, just life in general, but on top of your business too. I mean, you doing the podcast that you're doing, the 8 billion podcast, is very motivational, very inspiring too. And I mean, how has that journey for you contributed towards your real estate career?
You know, it's really interesting because in a way, you know, like the 8 billion podcast, the premise is really inspirational stories. It almost, yes, I do have real estate, you know, real estate specialists such as yourself that have gone on, and other ones. Season 2 actually happens to have a lot of heavy hitter real estate people, and that's just because now I think both the worlds are merging.
Mhm.
Now, how has it been in contribution? What's been really neat is even in sharing inspirational stories and, you know, like getting to interview book authors, speakers, community leaders, they all know that the basis of my professional career is real estate. So they'll sometimes either have questions, you know what I mean? Or like I said, it kind of merges also with like personal development. There's not one single person that can't benefit from personal development, wherever you are in life and at whatever age. So it's definitely been really big for me, even on just the career side,
Yeah.
but even more expansive on just the personal and spiritual growth, most especially because of the times we're in right now, currently coming from the pandemic, trying to figure out if the world is opening up. So many people are reaching in and actually asking themselves, am I really doing what I want to do? Am I contributing to my career the way that I can completely contribute, right? From a different aspect now in life as we move into different times. So I know that was another mouthful, but hopefully that all made sense in terms of like how having the podcast contributed to, you know, even my professional career.
No, it makes a lot of sense. I mean, I started my personal development journey probably, I think, 2 years now, and we talked about it on your podcast, how much it actually changed me and kind of molded me to where I am today too. You are right. Is so much negativity in this world right now. I mean, you turn on the TV and any kind of news, even my local news, like I can't even really watch. I'll maybe watch it to see what the weather's going to be, but you can do that on your phone now. So I stopped watching it totally, just because it's like, you know, all you hear is COVID, 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 people lining up, or, you know, and then you hear it's just one thing after the other. And so, you know, I don't watch much news. There's people that are like, did you hear about this? I'm like, wait, what happened? You know, because I mostly just keep it on kind of sports in the background.
Yeah.
And
That one you can at least keep on you know, on the go. Yeah.
Yeah, I mean, because I always, like, I do a lot of work at night and so on, but it's just the negativity will drain you, and there's so much of it in this world. But with personal development too, it kind of it makes you figure out how to get away from that in different ways, and obviously just work on yourself. I'm just a big believer in investing in yourself in all aspects, because it helps you with your business as well. It all reflects back to your business and how you deal with people, and how you want to help people and so on. So I'm just a big advocate on it.
Yes, absolutely. And once you start going down that route, to be honest with you, most people that I've known in the personal development or have gone down that route have never stopped. They've evolved more, and their businesses have gotten better. Their relationships have gotten better. I mean, you even shared how big personal development practice was for you. It literally changed the trajectory of your life. I mean, you ended up you ended up getting divorced, and now you're in a different position. It's life changing on many levels.
Yeah, it really is. So let's discuss, you know, let's shift back to your real estate career. So why real estate? Why did you get involved in it? Like, what was your reasoning over other careers you could have chose? So why did you choose real estate?
So that one is going to be easy, guys. It's family business. So my mother
Okay.
was in real estate. She first, you know, she migrated from the Philippines in the 60s, started out as an accountant, a CPA. And then, of course, that led her into, you know, she was, of course, doing taxes for people and said, you know what, you need a tax shelter. And real estate is a really great tax shelter. And so from there, she was like, well, I'm telling everyone to buy real estate, I might as well go into it. And from there, she started a very thriving career in real estate, and then started a business. And we grew up in it. So naturally, me and my siblings all got our real estate licenses at 18. That's why I'm in it now for close to like 22 years. I'm not even sure if I did the math right. Maybe it's even longer. But yeah, that's how I got into it. It was a family business started by my mom. She no longer, we lost my mom in 2018, but now my siblings and I have taken over the business. And it's just been something that's embedded in us. It's, like even if and I think I shared this with you when I interviewed you for 8 billion. Yeah, there was times I left the business, but you can't, if it's a family business, you can't completely remove yourself from it, right? Because when you're with family, you're talking about real estate transactions. If everyone's doing it, I knew the market. So, and I was deeply embedded in it, especially during the mortgage meltdown years, which was 2018 to maybe 2013, 15, depends, what areas you were in. But I feel that even if it was something that I can't say that I was really forced into it, because ultimately, if I wanted to veer away from it, and I did a few times, during that time period, my mom never stopped me, but it was just something so like the back of my hands, like I knew it. And I was fortunate enough that my mom had actually taught us and put us into the business early on, that, it's something, that became a part of, I think you shared the same
Yeah.
situation, the same almost background as well, right? You tried different things and then you actually came back to what you knew, because
Yeah.
it was almost instilled in you at a young age.
Yeah, and you go back to, kind of, it's like you say, you go back to what you knew, but it's like play the card you've been dealt. I'm a big advocate on that line, on that belief too, is everybody's dealt a certain hand and we all play it, and you can either play it right or you can play it the wrong way. But it's just like with business, you grow up in these businesses, it like the back of your hand. It was a love-hate thing for me. Like I hated digging ditches, doing all that kind of stuff too, growing up and kind of being a laborer and not really seeing any pathway at a young age into it. Like I was just thinking about how much I hated digging a ditch, and you're like, I'm not gonna do this forever. I want to try different things. You go and you experience different businesses and so on, but you grow up to love it, and it's been a part of your life, and you know it more than anybody, and it's like, why not utilize what you know and do it better too? And
Absolutely.
that's the thing. I have a respect for my dad and what he's created on the business level, but I've also helped grow the company as well too, and make it better by doing things that he didn't know how to do as well. So, and that's my overall goal too, is to grow that company even bigger, to something that, beyond his expectations as well. And he started it, let's make it better. That's the thing, and make it bigger and keep the growth. And no, I mean, you are a lot alike in that aspect of, growing up in a business and really utilizing what you've learned, and because you work in it. I mean, you just know it like the back of your hand.
Yeah, we do. And who would have known, right now, like as we evolve, that the marketing would end up becoming podcasts, it would becoming
Yeah.
social media, right? It's now just taking the best of what you have on top of the years of experience, and now taking it to another level. That's the advantage you have. But sometimes technology is advancing on so many levels, it's so hard to keep up. Like there's new platforms like Clubhouse, that's another platform that everyone's kind of jumping on to for, like, because we still can't do live events as much yet because of the pandemic. A lot of speakers have gone on, and it's almost like a live podcast type platform. So it's growing leaps and bounds.
Yeah,
On top of what we already have to pay attention to, which is our podcast.
yeah, that. And I tried doing Clubhouse. I mean, it's just on top of podcasting and social media, and then trying to do that every week, and then people inviting me onto theirs. And it just, there's only one of me. I have to remember that sometimes. And, that was the thing with that. It's just, there's so many outlets that you can utilize to, grow and get better now, more than ever before offered in history. And that's the thing, is like, we have to figure out how to utilize them. Podcasting to be one of them. And obviously with what we're doing, we're helping people in the process. That's what this show is all about too, is kind of helping people with some of the biggest decisions of their lives too. So that's what's
Absolutely.
important with it. So obviously being in real estate too, we talked about how you specialize in the short sale, pre-foreclosure and foreclosure world. Now, me and you talked about this, and as we know, we're in a crazy market. A lot of areas, very high demand in a lot of areas outside of cities, people trying to buy in suburbs and so on. Florida is nuts right now, where I'm at, with just no inventory and a ton of demand. Things are starting to skyrocket as far as pricing. Build costs are going up at a steady pace. So it's like, where do we see the market from here? Do we see this staying? Do we see this? And this is a big topic, because obviously I've had past real estate professionals on this show. We've kind of talked about how they do business and so on. But me and you are getting, as real estate professionals, we're getting this major question is, how do you see the market? Where do you see the market going? They're putting their trust in us. I wish we were fortune tellers. I wish we can sometimes tell when everything might pull back a little bit, or is it going to crash? So I wanted to have a discussion with you. This is a huge topic. We can probably go on for an hour on this topic alone. So as far as market, let's talk about what you're seeing first in your area. I'm sure it's similar to mine, and we'll kind of go from there.
Yes. So before I dive into it, Bill, what I did want to say is, yes, I know this podcast might take us in so many different to so many different questions.
Yeah, which is good.
So I'm happy to always come back if you ever have an audience that had specific questions that I can answer, because this market is very, very unique. And that's what the first thing that I wanted everyone to do is understand that I know that I'm coming from Southern California as a licensed real estate agent. Now, I'm not licensed in all other 49 states, so I understand that the laws are completely different. I'm going to try and give you guys the best general sense of where I believe the market is going, not only in Southern California, but things to pay attention to, because then it could be helpful to your audience. So as we know right now, historically, the rates are completely low, right? And that's why there's this huge demand. There's not as much, there's a high demand for inventory and, and a lot of, demand for housing. However, what we do have is we are still technically in the pandemic. We're about a year out from it. Lots of things are shifting because of, like the vaccines are coming out. So things seem to be opening up. However, one big thing that is in place right now is the moratorium of Biden, which is extended to September of this year, 2021, which originally was, when we went into the pandemic last March, it was only supposed to be for 1 year. Now, the moratorium, if people don't understand what that is, the moratorium has allowed for a lot of those people that have been affected and can't make mortgage payments to extend their mortgage payments to the back end of their loan. Now, this is different from the mortgage meltdown, and what you have to understand is when there's a difference between the forbearance laws in place now than there were back in the mortgage meltdown. The mortgage, right now, the forbearance allows you to take whatever mortgage payments you're not making and tack it onto the back end. So if, say, for instance, what I believe the law was, is they allowed you to do it for 1 year, right? Now they've extended it another 6 months. So in some cases, some people might be 18 months in forbearance. Now those 18 months get tacked onto the very end of yours. So it's not like it piles up. So the difference between the mortgage meltdown forbearance plans that are in place back then, as opposed to now, is these mortgage payments go to the back end. Whereas the ones in the mortgage meltdown, they would accumulate. And when that ended, you would go up to or you would contact your banks and make a negotiation of how you would pay that back, whether it gets modified as a loan, whether they say, no, you owe all 6 months in one big lump sum, or we can't. So that's probably the difference right now that you're going to notice. That's huge. Okay. So what's happening is it is a much better forbearance program right now with COVID. What you don't, what is the big things in question and in place is it's an unforeseen circumstance that has affected so many different people and from all different walks of life, the service industry, small business owners, and you can't identify those pocket areas as demographics. Right? All you could say is, okay, maybe service industry was heavily affected, or small business owners. Did they have enough to sustain themselves? Was there enough money that they got? But then again, you're also understanding they're also homeowners, and where do they live? So across the board, that's going to be the situation for everyone. So if you're going to ask me from an expertise standpoint, like, do I believe that there is going to be some type of softening of the market? I do, especially after September of 2021. And I only say that because I follow a lot of real estate experts whom I believe that through time I've watched them and they are right. Now, these in particular, and I'll give the names if you'd like me to actually share as a resource. So a few here, guys, that I follow on YouTube are Ken McElroy, sorry. Hopefully, Ken, you won't. And you know what I'll do is I'm not sure. Is this podcast live?
No,
Okay.
but I'll launch, this one will be launched this upcoming Sunday. So those of you listening, that would be, what's the date? That would be on the 28th. Okay. So this one will launch the 28th. And then what you can do is just share.
What I'll do is I'll email you everyone that I listed. And then if you want to put it in the description.
I'll share it. Yeah. I'll share it in there.
So Ken McElroy is one, Chris Crone is another one, and Neil Bawa are YouTube real estate specialists whom I follow, and they actually report on a national level. So they're not just specific, and they report on residential and they report on commercial. So those are some great YouTube people that I follow on a regular basis. I listen to their weekly or whenever they put out podcasts. Another thing to do is, you need to understand your local markets. Because like I said, if this is a nationwide audience that I'm talking to, me talking about Southern California is not going to help you guys, right? Because we have different bubbles that are in each area. Yeah. So your resources like online are going to be like Realty Track is going to be one. And like I said, I'm going to email these to you so you could put in there. Black Knight is another one. And then ATM or... So I'll spell that out. I'm not too sure exactly the spellings, but I'll provide that to you, Bill, so you can actually put that on the description. Okay. And these are going to be websites where you can actually hone in on really specific things that you want. You want to know pre-foreclosures or defaults, you know what I mean? In single family residence, in multifamily commercial. And then they also, in some cases, depending on which website you go to, it'll show you the top areas that are going through big defaults right now. Now, some of them are going to be in the multifamily commercial apartment space, and then some of them are going to be in the residential area. But these are all statistics you really want to pay attention to, especially those that are going to be concerning your local areas, because it's interesting, depending on which website, there are different areas that are affected, but they'll give like their top 10s. Okay. So yeah, so going back to just, if I feel like there is going to be a bubble, like I do believe that the market is going to soften and there is a bubble that's going to be happening. To the degree of the mortgage meltdown, no. And these are the factors why. Back in the mortgage meltdown, what was happening was it was so easy to get loans. And I don't know if that was the case for you, if you remember the market back then, right? All you needed was a pulse, and because you had stated income, stated assets. So it was so easy, and as long as you had the credit scores, you could get a loan. So in essence, you got people that were not reporting their true incomes, and as long as they had the FICO scores and the down payments, they could actually get into 100% financing, right? They can get into 100% financing, which was an introductory small interest rate, which was interest only, divided by 12, that gave you affordable mortgage payments. What people didn't understand was after a year, people were banking on the equity they were earning on their real estate that they were refinancing at 80% loan to value, which got them into really good mortgage payments. However, that didn't happen in 2006 is when that bubble
Mm-hmm.
burst, right? There was no 20% equity. Mortgages were doubling because now it wasn't interest only.
Mm-hmm.
And these people, in essence, were not reporting their true income. They couldn't really afford it anymore. And so that's why we had the mortgage meltdown on a large scale. You know, it was just everyone across the board got easy mortgages, and then there was no equity to refinance in. And of course, if they weren't reporting their true income and true assets, they didn't truly have the funds to back up and support them in their home ownership journey. What's different nowadays, or what I would say fast forward, is the government really has had a lot more control of, the way mortgage loans. It's under stringent guidelines. So, you'll have, in most cases, you'll have first time home buyers, which is 3% down payment. So those would be, I would say, the ones that are closest to maybe where their equity or their value of their house is close to what they owe. And then in other cases, you have some people that are 10 to 20% down. So they are sitting on equity. But what's different is you don't know what their circumstance is.
Yeah.
So whether they were completely wiped out because of the pandemic and they had to shut down their business, even if they have, say, for instance, 10 to 20% equity, they're not able to make their mortgage payments, and the moratorium will end. So let's just say it ends in September, right? It ends in September. Now, unless Biden extends it, but I can't imagine the banks being able to go past 18 months without getting these payments.
Yeah.
So now you're faced with, what do I do? At least you have equity, right? But the thing is, now you're forced to either sell or figure out. And if you don't have the income to make the mortgage payments, you're forced to sell in that case, right? But you have equity, so that's good. So you're not going to see, in some cases, a short sale because there's equity.
Mm-hmm.
But you will see properties going on the market. Now, what I encourage people to do is, if you are in that situation right now, I would encourage you to already seek what your options are, because once September hits and everyone's in that position, now you're going to end up going on the market with more competition. Whereas right now you have a lot of equity. Does that make sense?
Yeah.
Mm-hmm. It's a seller's market. So I'm not, of course, I want for everyone to be able to save their home and be able to make those mortgage payments. And if 6 months gives you enough time to really reconcile and figure out what you're going to do, then that's great. But if you really don't know and it's unclear for you because maybe your industry was wiped out, your business was wiped out, I encourage you right now to go find your specialist in your area and at least seek your options. And the first thing to do is probably call your lender.
Well, let's go off of what you just said there, because, and we'll keep going.
I know that was a lot, though.
No,
Bill.
this is great. Yeah,
it's really good for your audience.
No, this is definitely really good too. And I'm gonna kind of chime in on just thoughts throughout this too, just because right now, if they do go do kind of, their due diligence and figure out, okay, maybe I should sell now before this wave of people trying to sell and get out happens, and then I'm getting a lower amount, because right now is probably the best time to sell.
Yes.
Very high demand. Prices are, not through, but prices are good for everybody. There's a lot of opportunity for sellers because there's just no inventory.
Mm-hmm.
The problem that everybody's having now, though, is where do I go after I sell? That's the common question you're seeing, which creates a low inventory environment because things are expensive. Okay, I can't build because construction costs are a lot more.
Mm-hmm.
I use me as a real life example. I deal with it every day. Is I just had a lady call me today. We built their house a year and a half ago. Costs were a lot less when we built it then. This is Florida costs, may I add. People listening to this were a little more expensive where I'm at, but 2,300 square foot house, they ended up paying about $825,000. Today, they would be around $950,000 to build that exact same home that they did. This is a custom home. It's not a track production home. It's a custom home. Yes,
Okay.
it's smaller, but there is custom finishes inside. So that just shows you the gap. So now in her mind, she was like, wow, costs have gone up 100,000.
Mm-hmm.
Is that still worth it? Am I gonna, so you're running into these things of, all right, well, what else should I do? I can sell that. And she even said this, she goes, well, I can sell the house that I built with you guys. And how much do you think I can get? I said, well, there's a comparable house that just was on the market that sold for 1.7 million. Smaller than yours, older. I go, so you can at least probably get 1,850,000. So she, in her mind, she's like, wow, I can take that premium, but now where do I go?
Yeah.
Because if I build now, there's no lots left for me to buy. The lots are even more money than when they bought at 350,000 for a canal. Now she's going to have to pay close to 500,000. So it's like you're getting all these aspects, and it's different here than everywhere else, obviously, but it's similar situations, just maybe lower amounts or same amounts or even higher amounts. You're seeing this to where people are, okay, where do I go from here? If I do sell, I can make a premium, but do I want to pay rent at a higher amount because it's going to be higher than my mortgage payment because I have such low interest, and I'm going to get a rental? Say my mortgage is 1,700, then I go to a rental that's smaller, not as nice, for 2,200.
Yep.
It's like that's what you're running into, and that's the problem where I think everybody's hitting the brake and being like, well, I'm kind of stuck. You know what I mean?
No, and you're right. And everyone's situation is so unique because it's like, okay, there are those people who are like, yeah, heck yeah, I'm going to sell and I'm going to hang on to it. Because for them, they're okay getting into the rental. Because for them, if they're thinking, okay, if the market is going to soften, I'll just hang on to this, live like very, live very either frugally and you're seeing that across the board. Even like savvy investors, whether it's stock markets or in real estate, they're liquidating right now because the market is high. The market is high. People have this tendency to think like, oh, and here's the irony of it all. There's a lot of buyers that want in because now they're in places because of the low interest rate, they are in sales prices that they wouldn't normally be in. So, but remember, there's a market for everyone. So do you pay the higher price with the lower interest, or do you wait and pay a little bit higher on the interest and a lower amount? It just depends on your situation. Another thing that's really unique right now is the fact that, like I said, there's a mass exodus of California because what's happening is everyone's being able to log in from anywhere. So what they're doing is not paying either the high mortgages or the high rents in Los Angeles and moving out to the suburbs, or in some cases moving out of state because they can log in from anywhere. Right? So like I said, so many things are so unique, and you and I are being asked on on a daily basis, but each of our clients are very unique. So what you want to think about is, where do you think life is going to take you in the next few years, right? How stable is your job? What do you honestly really want to do? Could you really, do you absolutely love your job? Does it require you to be either home base or to commute to somewhere closer? Because those are also factors that are driving my local market. Los Angeles doesn't seem to be affected by, in terms of might not even seem to be affected even if the moratorium lifts, because there's such a high demand to live in Los Angeles simply because everything's there. Big corporations are there and people are still making really good money. So that's why I'm saying I can't just speak for Los Angeles, and that's the case across the board. It's not. I mean, there's corporations that are up and leaving California, moving to Texas. There's so many moving factors that are in place. But you'll also understand when you do a lot of these statistics and you read them, you'll start to see the cities. And what's interesting, I know that, we mainly focus on residential, but a big thing that I look at too is multifamily commercial units, because those are some of those owners of big investment properties are in default. And they're in default for these big apartments where these people are renting. So it's interesting. And Florida, I think Florida was one on there. I don't know specifically what county, but Florida is another big state where everyone's going to be migrating to because in terms of rental market, because the weather is good. You know what I mean? You have your snowbirds going down, and they're going to say, well, heck, if I can go move down to Florida with, really affordable rents, the weather is really good, you're going to start seeing everyone in the Northeast start gravitating down to Florida. So you might not even be a market that might be affected. You know what I mean? I mean, it might still continue to be really good for you because now you're getting people from New York, like Pennsylvania is going through a big default in multifamily. And I just visited Philadelphia. I just came back yesterday from Philadelphia. And I was actually shocked when I listened to one of the real estate experts that they're going through a big default market right now.
Wow.
here the thing is, statistics don't lie. And if
Yeah.
and if there are, like, what was the last statistics? There was about 2 million homes that were in default as of last month. That's across the board. Now, of course, there's going to be some areas that have more defaults than others. That you're going to have to get with your local real estate agent or do the statistics, because your title will know exactly how, what your county is, who the defaults are. And in some cases, they are public, they're public knowledge. So it's going to be up to you guys, the audience, whether you're a homeowner, a buyer, an investor, to do the deeper research based upon what fits your lifestyle right now. But I'm just giving you hints and dropping things of maybe the way your thought process should be, or what things to pay attention to.
Yeah, and it's huge what you're saying too. Do you see, so let's say come September and you start seeing this kind of downfall where people start having to list homes more and more and more, values start dropping because there's such heavy amount of houses hitting the market. Do you see a domino effect for the whole entire market as far as the country in general, trickling into other markets as far as the stock market and other certain markets that people are involved in? Obviously, there's people involved in cryptocurrency, stocks. There's people involved in real estate. There's people involved in sports cards like myself. There's people involved in, I mean, there's so many different
personal
assets.
development.
Yeah,
And
personal development.
all kinds of things, right?
So do you see that kind of roll over and as like a domino effect? I'll start there into other markets, like say, Florida, obviously they say there's like 1,000 people a day moving here, but as things open up, people start getting back to normal. Is that going to slow down the drive to Florida? And then also with this thing happening in September, is that going to, and homes start popping back up at a little bit more affordable pricing? The Fed's already come out and said they're not going to raise rates really anymore. So there's, that you got that factor that rates are going to stay low. So does this all trickle down? Does it have a not a but a countrywide effect? Do you see that happening?
I mean, altogether, yes. But what I would say is to pay attention to the big markets like Los Angeles, right?
The
And
cities
this is
more?
what the big, like the big cities, because the big cities is where a lot of investors will gravitate to in terms of a commercial, like commercial multifamily units, because when they want to buy like maybe 100 units, they want to make sure they can rent it. They want to make sure that it's going to be occupied. And if you're going to buy 100 units and you get this awesome deal and it's like in Timbuktu, who's going to rent if you have 100 units? And then now you're going to lower, you know what I mean? It doesn't make sense. So big real estate investors are focusing on like metropolitan areas. Like that's where they're looking to grab these really great deals, So, but on an even just larger scale, like all the things that are happening that that are coming into place, the raising of the minimum wage, I don't know if you've ever, $15. Now that's great for the person that was making the minimum wage, but who as a business owner can sustain $15 an hour? Not small business owners, only big corporations. Right? So those are going to be like your big metropolitan areas that are going to have big corporations that, that have those people, that are able to pay that income to those people. And then you also have the $2 trillion printout, $2 trillion printout that we have that's going to contribute to inflation. You are directly affected by that. I mean, you saw how much your cost went up in building. And I just wanted to ask you on a side note, did your cost in building go up because the demand became high because with the shutdown, there was less production on everything? Yeah.
Yeah, I'd say that more than anything on top of Canada. I mean, lumber prices are through the roof. That's throughout the whole entire country right now. And we used to get a lot of timber out of Canada, and now Canada has been shut down completely for as far as lumber. So now you're seeing $50+ for a sheet of plywood and $10+ for a 2x4, which is crazy.
Yeah.
So it's just then other materials up. Obviously, as demand happens too, you have your subcontractors, labor prices start to climb a little
Mhm.
bit. You got to keep them from getting too greedy. And then also, but their material costs, because they're using so much material, goes up as well.
Yeah.
Stucco, lumber, less roof materials, windows, doors, all that stuff's crept up. So now it's like, and it keeps going up, and it's like, how much can we push the limit? Because it's a domino effect down
Mhm.
to the client, basically, because it's the suppliers. Then they obviously supply our subcontractors buying the material. Our subcontractors are selling it to us as the builder. We're building the house. Customers got to pay the builder. So it's a, kind of that trickle effect. So
Yeah.
when is that going to stop? I don't see it anytime soon because
Yeah.
demand's so high. It's nuts. I get 2, 3, 4 calls a day to build a house, emails, everything. It's just, and now it's coming to the point where we're kind of picking and choosing who's the right fit for us to work with as a luxury builder,
Yeah.
because
Which
we
is
can't
really
work with
different.
everybody. So
Yeah.
it's in the building world, we always say get it while you can because it
Mhm.
never lasts forever. So
Yeah. Right. And that's, yeah. And do you preface that with your future clients? Like, the cost is going up because of so many different factors. It is a trickle effect. You might not feel it immediately in different industries, but you will across the board. We will feel
hmm
this, things are dramatically going to change. And I think as we're coming, well, not full circle, I should say, as we're turning the big boat, like, now you're going to start to see things, but it does take a while before you start seeing the effects of what maybe decisions were made for us now, or just when the new administration came in.
Yeah,
You know,
no, I agree. I agree. What I fear too is if we're having, and because we're starting to see some issues in certain areas as far as getting material. Appliances are coming in at different times now when we used to all
mhm,
get them at the same time. So you're starting to see, I mean, little things, garbage disposal, stuff like that, certain faucets and fixtures, just things are coming in differently now. So it makes you think, okay, what about a year from now? Where are we going to be? Because
yes,
demand's not slowing down anytime soon. It's only increasing. So, and yet we're still not really getting anything from China. We're
mhm,
still not getting anything from Canada. South America, they have their issues too. So it's like, okay, what's going to happen a year from now?
yeah,
And I kind of, it's obviously setting the expectation with clients. They know this. I mean, COVID, we tell them, obviously there's been supply issues with that because everything is kind of COVID related to now, but the demand too is just insane to where we're at in Florida. So it's just, yeah, everywhere. I mean, I talk to builders all over the country and in the
mhm,
suburbs everywhere. They're just crazy
yeah,
of everybody fleeing the cities.
yeah. I can only imagine. And then you're at the mercy of how these countries operate on
hmm
their COVID rules,
hmm
right? So yeah, I mean, I don't. It's insane. Like, it's interesting how everything we're moving and trying to move at the rate that everyone else is trying to, we really, I mean, and just everyone just needs to be. What I want to say is just, I know with the chaos and frenzy of everything, we're not, this by no means is trying to scare you. It's just trying to give you more information so you see things from maybe even a perspective you might not have looked. So that at least when I give you my advice, or Bill gives you his advice from Florida and California, you're understanding our thought process and how we're looking at things, so then we can advise our clients. And Bill, you come from home building. I come from residential resale. So
hmm
the factors you face are much different from the factors that
Yeah.
I yeah, but
Yeah.
I mean, we're both in really great markets right now. It's just, a lot of people are saying this market is just so good. You can't, like, it doesn't seem feasible. I mean, or it doesn't seem possible that a bubble is, well, that's exactly what we came from in the mortgage meltdown. Something like, Everyone was, you know what I mean? There was even movies done on it, The Big Short. Everyone thought nothing would end. And all of a sudden it came to a screeching halt because people were not looking at statistics, and the hard facts will tell you some things, you know?
And they're still not doing it today, too. I mean, if you look at the statistics and what's actually going on, yeah, there has to be a slow. It can't continue. It's like the stock market; it's gone up and up and up and up. So what goes up must come down. It's reality. It's what happens. History repeats itself.
Mm-hmm.
But a correction, not so much a crash, but a correction is always a good thing. Now, where we get off or out of tune as far as corrections is with the media. The media likes to really pry in that a correction is a problem. You go on, let's say CNBC, and there's a stock market pullback or a sell-off. What do you see? All you see is red all over the
Mm-hmm.
channel, things flashing, all the guys speaking about the stocks are saying, oh, this is where that Dow is down this much, this much, and this much. They don't really mention how long it's climbed up for and how much money was
Yeah.
made for, they just say, oh,
They're
it's
never
going. Oh,
throwing
yeah.
confetti when it is
Yeah.
good.
I mean, so many people have made a ton of money over the last 5, 6, 7 years in the stock market because all it has really done is gone up and up and up. Yeah, you've
Mm-hmm.
had your corrections here and there. When COVID first hit, it went down quite a bit, but it's recorrect and it's went all the way past where it was before. So it's like with real estate, obviously real estate's been on a steady climb too. Okay, there needs to be a pullback because obviously it's priced people out of the market. Our market's already priced people out of it. It's a different world. We have a lot of cash heavy buyers right now coming down. It's a lot of money being spent, a lot of big houses being built now on the luxury end, and the lot values and everything going up as much as they have priced quite a few people. I was dealing with a guy, he just emailed me, and he emailed me, he's like, hey, I haven't heard from you and blah blah blah. He's like, seems like the market's crazy down there. I go, you haven't really heard from me because there's no properties that have gone up in your price or come on the market in your price range in a long time. And he goes, yeah, I understand that, this and that. I'm starting to look up at Cape Coral, which is north of us, which is a lot less value, but the properties don't sell as well down up there too. So he
Yeah.
got priced out of this market and starting to go up more north on Florida on our coast, and property values are less, but they're a lot more than what they were too. So it's just crazy seeing kind of that effect. We all know it's going to have to pull back at some point. When? Maybe it is in September, like you're saying. And is it going to be a bad one? I don't know. That's opinion, and people do their research and so on. Like you said, it's important to do that and stay kind of in tune of what the market is, because there's a lot of realtors too that think this market's just going to keep going and it's not going to stop. But it's like, do you remember 2005? Do you remember, like, it may not be that bad, but with all the craziness and inflation and price and bidding wars and all this certain stuff that's going on, it's like, it's got to slow down at some point.
Yeah. No, and it's interesting because I never knew when our market, our expertise, like our specialty, would come up. And the pandemic, it didn't do it instantly, but I'm telling you, when I took my refresher courses in the summer of 2020, even the instructor was saying the government knows that there is not that the amount of forbearances will not be able to, because of the unforeseen circumstance, the pandemic, it's not going to be able to sustain itself. Like, it will give. And even just in my local neighborhood, I even saw a short sale already in the fourth quarter of 2020. So it's kind of interesting. This market is super hot, yet you're going to see a short sale because it's to the individual, like what their circumstance was. And it could be a one-off. It could have just been they happen to have a property in this market. And I can't tell, like, for me, until I get closer to that time is when I will pull the local stats for my counties. But right now, what I'm even seeing a shift in is there's going to be not so much maybe foreclosures that hit the market the way it did in the market's meltdown. But what I'm seeing is going to be a lot more pre-foreclosure negotiations. So you're going to get a lot more savvy sellers that are going to be more like, let me go through the process first. Let me be informed, because I mean, that was such a big market to come from. There, a lot of us still have had, a lot of us were in that market or have experienced it. So, and the banks are more equipped to handle it now, meaning to say they'll have their loss mitigation departments ready. Because I mean, it wasn't that much long ago that they, people have had to gravitate out of that industry a little bit, but now in unforeseen circumstance, everyone's all like, oh, it's amazing how like overnight everyone was already reaching out to my family like, well, where do you guys see this market going? We didn't even in March, we didn't even foresee that the interest rates would keep going lower, that real estate would just keep climbing. That was a big shock for I would say myself and maybe a lot of agents too, across the board.
Yeah, and it's the thing is, the way I like you said, there in my market, I've seen from personal experience a lot of, because I've gotten the phone calls. I think there is a lot of over leveraging going on in a lot of different areas. A lot of people, when times are good, everybody has a little bit of money, this and that. They overextend, interest rates are low, it's cheap interest. I can afford that. Why not? This and that. So they pull out a loan. Maybe it takes them a while to get approved by that loan, but then they do it. Then they're like, okay, I got some cash. It's cheap money. Let me put it into a house in Florida. Oh, this house is a little more out of my price range, but I can do it. And that's how that over
Yeah,
leverage
it's that
starts
might.
happening and happening. And then when things come to a screeching halt, which they do, then that person's left high and dry. And it's happening in the building end too. There's builders, and I always warn people, that I've said it on this podcast multiple times. There's builders building houses for, I don't even know how they're doing it, or for prices that are just unheard of in my area. It just makes no sense how they can build for that amount and not put profit in their put profit in their pockets. And the only explanation to it is the back guy on the back end is going to get burnt, or they're just charging the hell out of somebody at the end of the build. I don't know. It just makes no sense. They're $200 less a square foot than us, which is an extraordinary amount. And it's like, for the cost they're charging, I couldn't even I mean, you can probably just get away with doing walls. That's it. And maybe a roof. So it makes you really think, how many people are going with these specific builders. It's probably happening everywhere, because whenever times are good like this, builders all come out of the woodworks. A lot of builders that disappeared come back because they want to make the quick buck. They don't have a conscience. They don't care. A lot of them didn't get in trouble the last time. They're not going to get in trouble this time. And they usually flee after they take the money and run. So it's like you're seeing this happen again. History repeats itself. People tend to forget the past and how it worked because they get caught up in the moment. They get caught up in the fear of missing out, the FOMO moment too, that they don't want to miss out on this. And then all of a sudden that bubble does burst and they're left high and dry.
Absolutely.
So that's what you kind of, I'm seeing now in this craziness out of some parts, but not all. I mean, like I said, there's a lot of cash coming down this way too, a lot of cash buyers and so on, but it's just somebody's going to be left holding, I forget the saying with it, but there's somebody that's going to be just left high and dry that just gets screwed, or some people, and it's a trickle effect that happens every time. When it could be coming up, like you said, and that when one thing happens, it's an effect, it's a domino effect, and it just takes, it's only a matter of time, and then here we are in a crash, or a crappy market. So.
Yeah. Because I mean, it's so hard to even fathom that industries were wiped out. I mean, I was just listening to, like I told you, Ken McElroy, and he was, his most recent release on his YouTube was talking about the K-shaped recovery. So it's like it's what's interesting, right? Because you usually have a U or a V. He's talking about a K. There's some industries that are completely plummeting and some that are just skyrocketing, which is so unique in history. So it's almost like we can sit here and like I said, like we can hash out like what our expertise is, but even me being so being so well versed with even specialized assets, I even know that this market coming up is different. Like
Yeah.
I said, and I know a lot of people say, "Oh, you're fortunate because not very many people got to learn that or represent banks," and I am. There's a very heavy market to deal with. Pre-foreclosures and short sales, you're dealing with people that have lost their homes, their businesses. Then you're trying to equate that into a package you're going to present to the bank. You know what I mean? And then I'm here representing the sale of the home, trying to see which is the best buyer. And then, of course, the bank is trying to say, did you represent the property properly by, giving it the right price? Because now you're going to start seeing people, because it's a short sale situation, to try and, bring it completely down. And everyone in the neighborhood is going to get pissed off because everyone's like, I'm losing my equity overnight.
Yeah.
So it's really unique times we're in. It really is.
Yeah, and with all the money being printed too, it's just it can't sustain. There's so much cash being printed, and it's like then you're seeing these alternative investments, and then people moving money out of stocks and liquidating into real estate because they feel it's more secure. But is it? And then it's like, or am I going to put it in cryptocurrency, which went down 3 years ago and completely dove after a ton of people got burnt there too. So then it's like,
Mhm.
okay, where am I going to put my money? There's always a bubble and everything. It's just, when is it going to burst? And, are we here now? I don't know. Is this going to keep going? I talked to a realtor the other day. He thinks we got another 2 years before anything bad happens here in this general area. So, and that was his opinion on it. He's like, I don't see this slowing down just with the interest rates, the way they're going to, sustain themselves. It's like a cash heavy market. There's so much demand for people trying to move down in this general area, and they can't find houses. And, builders are selling for 100,000 to 150,000 more than what the house sold just 90 days ago. Like, it's
And
crazy.
but that was the situation in 2005, 2006,
Yeah.
like literally overnight. And many people did not feel that effect until 2008, but it really started in 2006. We landed our first foreclosure account in August of 2007.
Okay.
And it was, we were fortunate because my mom had come from another market, a short sale market, where out for us, like McDonnell Douglas had massive layoffs in our area where we live. So them specifically, like in the Cerritos, Long Beach area of Southern California, there was a mass number of people who could not afford their mortgages simply because they were part of aerospace. Then when we, of course, there was a little bit of that market. Then we came across the big market, everything was high, but of course, if you're, my mom, she had already seen a different market. She was looking at things. You now, like what you're saying, you're getting approached by more people saying, I might wait. I might wait. Well,
Yeah.
what's their reasoning behind waiting? If enough people just wait, there's something to say about that.
Yeah. Yeah. And that's what, like we talked about, you're starting to kind of see, okay, this market's too crazy. I think I'm going to wait a year and see or do you think I should wait till summer? Or how do you think it's going to be in the fall? Do you think there'll be more inventory? I'm getting asked all these different questions constantly. Where do you see a year from now? And it's like, if I had that crystal
So,
ball and I could predict the future, I'd help you. I mean, I want people to be as safe with their money as possible. I always explain to people it's a different world down here. It really is. We're a lot of waterfront. Waterfront is prime in any kind of real estate transaction. When the last crash happened, we recovered a lot faster down here just because the property is so unique.
yeah,
That's the difference versus somewhere else in the middle of the country. So it's just the more unique something is, the better, the faster the recovery is, and especially in the cash heavy area too. Money, income, all that kind of stuff factors into different situations. But if a crash does happen, things go down. It's going to happen. It's going to happen everywhere. It's a trickle effect down the line. And it's like, is it going to be as heavy as before? Probably not, like you said, because I think hopefully a lot of people learn their lessons. But then again, there are people that haven't, and they forget about that past time because it
yep.
was many years ago, and they get stuck in the moment, like we talked about, where things are crazy right now and on fire, and they're like, this can't slow down. you
Yeah.
know?
And another thing too that I wanted to mention was what I'm seeing that's different is like in 2005, 2006, there was a great barrier to entry as an investor, right? Because if you did have a lot of, like maybe funds that you could invest, some people were, kind of taking advantage of maybe a single family residence home in, like, for me, what would be called the high desert that they could buy. But now you're getting people, capital investors, pooling their monies together and having more buying power. That
Mm-hmm.
as an individual investor, it's getting hard to enter the market because you're getting bought out by, you're competing now with large capital investment groups, or, people that have pooled their money together. So what I wanted to tell you were like syndicate deals are becoming more popular,
Yeah.
right? And pooling your funds together and becoming an investment group, as opposed to you trying to be like, oh, a flipper,
Mm-hmm.
because there's risk in that too, and then you're the only one. I mean, it's do or die for you. It used to be fun back in the day, but now you're just like, oh, do I have the wherewithal to do it by myself? There's
Yeah.
so many different factors that, that are changing as time changes.
Yeah, yeah. People are becoming a little bit more. I mean, they've learned different strategies and becoming a little bit more smart with their money
Mm-hmm.
too. That's the thing. It's like, it's hard to predict. It's hard to predict where this is going. I mean, a difference too, I think this time around, especially where I'm at, is, and I've spoke to other realtors about this, is the difference is more people are buying to stay rather than buying for investment and to
Yes.
flip. So back in 2005, things were sold, bought and sold, bought and sold, bought and sold.
Yeah.
Now people are
Very
just
important
buying.
market. Uh-huh.
Yeah, people are just buying and they're staying, and they're just buying whether they're going to rent it or they're going to just be snowbirds. Or they're going to stay here for good and move to Florida.
Yeah.
So you're seeing that difference too. So that's going to have kind of a different effect in the long run, I think, too. So should
Let
be
me
interesting.
let me ask you, Bill, like, because for us, maybe in the years of like 2000, maybe starting 14, 15, all the way to maybe 17, 18, there was a big surge of foreign investors buying
Hmm.
homes here in Southern California, and they were buying them cash, which literally made real estate skyrocket and priced out so many just Americans. Did you guys have kind of something similar to that happen in
Yeah.
Florida?
Yeah,
Okay.
yeah, we had a lot of foreign investors at a certain point, obviously not recently.
Yeah.
That kind of went away. A lot of them have sold too. They actually sold recent. Some that I know because they couldn't come to the properties. They were stuck
Oh,
overseas.
yeah,
So
overseas. Okay.
so they sold and obviously took good amount of money for the properties.
Wow. Yeah, because there's speculation too that they're gonna open up to foreign investors again, and then that's another that's another thing to pay attention to. So
Yeah.
there's so many different factors. Hopefully, we didn't confuse everyone there. We touched on so many things, but it's good to know these things. Some people would now just want to think like, oh, it's not just a feeling I have because the interest rates stay low. Like, know your statistics, know your areas really well. Like, do your due diligence to research, and it's not hard. You just go on Google or DuckDuckGo, whatever your search engine is, and you just start with your searches first, and know your local communities, and then of course more than ever know your own personal situation. Just
Well,
be really savvy with your situation.
yeah, I mean, we're in no means to give financial advice to anybody, but it's just if you study and actually listen and learn and are willing to learn too, I mean, people appreciate your opinion on stuff too. I mean, that's what we're in this business to do, is give an opinion, not state facts, because nobody can state the facts of what's going to happen in the future besides the man upstairs. But it's like, it's, we don't know. I mean, that's the thing. And I try and give my 2 cents of, but I also listen to people too and listen to what their opinions are on it, and see. And it's just, you got to stay open minded with it. You can't fear everything's going to collapse, and you can't just hide in a corner. You still got to live.
Yeah.
I'm a big advocate on that, but you also got to be smart about it too. I mean, it's like Warren Buffett 101, buy low, sell high. I mean, are you going
Yes.
to buy in a buy? Are you going to buy in a high market right now? I
Right.
personally wouldn't. I bought at the beginning of COVID because while people ran, I went in and I got a better deal on my
Exactly.
property. And now I can sell this house within less than a year for 100 and something thousand plus more than I bought it for. It's
Yeah.
crazy.
Yes.
But due to capital gains, I can't do that.
You
So
can do that. But yeah, so I mean, and like I said, like if you had an audience that was interested and maybe wanted to touch more on in specifics, because like I said, another thing to pay attention to, I believe, might be a big pre-foreclosure market. But a lot, what I'm saying is, when I say pre-foreclosure market, a lot of people trying to do back-end deals,
mhm.
meaning to say like, this might actually come from an investment perspective, like, finding some of those investors that are underwater and they have equity, so you're trying to cut a deal with them and trying to minimize their losses. So I think that those are a few things, if or like I said, whatever your audience seems to be interested in, I'm happy to always give my feedback or whatever is.
Yeah, no, I'm definitely gonna have you on again in the future because we should do a follow-up episode
Yeah.
closer to
What did our
September.
crystal ball predict? Were we
Yeah,
right?
and see how we did because this has been great too. I mean, we there's even the commercial side of things too. Obviously, in Florida where I'm at, commercial is a little bit different because it's been pretty open for a while now versus
Mhm.
everywhere else where there's a lot of shutdowns and stuff. Businesses have closed for good, and especially in cities like New York City and so on,
Yeah.
it has paid its toll on people as well. So, I mean, that's a whole nother discussion as well. Obviously, we're getting to about an hour here. I want to hit on, I always do these questions because they're important. I go into you a little more personally.
Oh, of course.
Yeah. So I always ask this question to kind of finish off things too. So, what about you personally? You have built an amazing company and your brand and your podcast. It continues to grow every single day. So, what lessons have you learned throughout your journey that we could all apply to our own business or lives that can help us grow?
Absolutely. Thank you so much. It's been quite a journey on all levels, and building a brand and building a business doesn't. It also comes with sometimes failing in it. You know what I mean, or going through the different lessons you have to do for growth. So my biggest thing that I would say is always, Bill, you and I are big on personal development, and it
Hmm.
seems to be the fuel right now that always creates a better business, a better you, a better. So what I would say is, if you haven't had a chance, or you're going through, certain things, the best investment, like what you're saying, is yourself. In the last year, I would say year and a half, I've invested so much more in myself, and it's paid back in leaps and bounds. You know why? Because when I became good to myself and I became a better person, I became better to other people. And when I'm better to other people, I became a good business person to other people.
Hmm.
You give the best deals, you give the best advice, you're acting out of integrity. And so from there, the returns come back tenfold. And it's not even like you're trying to do it to make money. It just comes back because who you are as a person shows. So I would say, in all of this, work on yourself the most, because you never know. Like I said, a pandemic can wipe out your career and your business, and you might have to start all over again. But what you really have at the end of the day is who you are as a person. So, and if you're able to understand things from a certain perspective, you're able to navigate through life's problems much faster. So
Yeah.
start with that. Start with
Yeah.
personal development. Eventually it goes into a faith-based thing, because you also understand that there's a higher power that sometimes governs you. Like, that's where faith comes in, right? It's like not knowing or being able to see something with your own eyes, but knowing that it is a better tomorrow. So I would say, in a lot of the lessons, the biggest thing that I would have to say as a great advice is start with personal development. From there, there's an inner guidance system inside you that will know the answers and the way to grab and the way to navigate through life.
Yeah, I mean, you're preaching my language, you know that. So, well said, well said. Because, I mean, it all starts with yourself. I mean, not to sound cliche or do the, but it really does. Because when you really focus on yourself and work on yourself, that's the most important thing because it really branches out in all aspects surrounding you in so many different ways. So it just everything works and it just keeps on going and going in so many positive ways too. You're always going to have your bumps in the road, but if you're a positive person, you can get
Hmm.
past that a lot
Yeah.
faster. And I've noticed that too. And it's just you can face things head on a lot better as
Yeah.
well too. Just the confidence and everything.
Yeah.
So.
Yeah, you don't sit in that lower vibration of like constant, like either depression or lack of self-worth. Like that's what I'm saying. Like you can almost get through anything in life if who you are inside is solid. But
Mhm.
it takes work to get there. You know what I mean? It takes work. Sometimes it's a series of events in your life that happen. But I promise, and I know you will back me up on this, that if you work on yourself, like so many things will turn around. You'll
Uh,
see things in front of your eyes that will start to change.
yeah, no, 100%. Yeah, I love that. It's just it helps so many different ways too, and there's no, I mean, there's no cap on probably what I'd spend on self development.
Mhm.
Obviously, you got to be able to eat and drink and and have some water. But I mean, there's just spending money on yourself and into your personal self and learning and constantly growing. It's probably one of the best things I've done, and I'm sure you can testify that obviously and say the
Mhm.
same thing because it's
Yeah.
so important. So love that answer. I'm 100% with you on that
Or,
one.
and I want to add something too. You
Yeah.
and I touch it, and I actually practice it. I stayed away, depending on where you are in life and you're going through a lot. We talk about, in personal development can become expensive depending on the courses. But like I said, there's great resources like either social media. There's some great teachers on there that have, they post. There's books you can read. There's a lot of
YouTube.
different things. And when you tune yourself out of like the fear-based news and media, and like sometimes I hate to say like, mainstream media, but sometimes that's all it, that's what it is, and you tune into more reflection, it does start to shift everything for you. Because the more you concentrate on fear and all your problems, the more problems and fear you're going to have.
Yeah, I've seen it with myself. I mean, whenever I'd watch and get on kicks with what, and I'll use the news as an example because it's one of the most negative things ever. It's on everywhere you go. It's on at the gym. It's on,
Mhm.
and it's like I've caught myself getting sucked into it and watching it and just like it's all it like take then you see it all over your phone and social media and it's just you everywhere you turn there's something negative that pops up and it really absorbs a lot of your time without you noticing it, but it also motivation and you thinking of things that outcomes that may not happen. You start thinking of things like in the future, where's the future going to be? Okay, if this president gets in, let's use this as an example. This president gets in, everything's going to go to hell and the economy is going to
Mhm.
tank and this and that. And it's like you start processing this in your brain, even though it's not going to happen, you make it seem like it's
You
going to
make,
happen. And then it reflects on what you actually do in life and your business too.
yeah,
So it's
absolutely.
that effect that, you overthink everything. We don't know the outcome of what's going to happen. I mean, the best thing we can do is work on ourselves, keep a positive attitude, and just
Mhm.
shift. Be on a
Yeah.
pivot, be ready to shift. If COVID hit, we had to make different pivots to better our business that way. The best part thing you could have done is probably got online and did more social media and
Yep.
content too, because so many eyes were in front of the computer. So it's just thinking positive, keeping your head on a swivel, just whatever, being able to react to the times and what goes next. I mean, and just stay a positive mindset and just try and, do the best you can possible. Times are going to be hard. It's business 101. It's life. It's just how you overcome it and get through it. And you don't just put your head down and hide in a corner, so
Yeah,
it's,
absolutely.
it's a big thing. So, Love that answer. Another thing too, I always ask about your past. Let's hear about your future. So where will we see Liza Florida in 5, 10, 15 years? Who will you be?
Who will I be? That's a great question. Actually, I never knew that going into the family business, I would be in it, but seems to be something that is like, I end up loving the business. So I will always be of contribution either through teaching in the real estate realm. My whole family will be in it, whether my brother runs it or whether I choose to do it on a more full, not that I'm not full-time, I am full-time. But with the podcast being the premise of like inspirational stories, really, Bill, I've been starting to share this with a lot of people. Ultimately, when the world opens up, I'd love to travel and actually share more of the stories. We're sharing stories here in the United States. Everyone's got stories of what they had to overcome. I'd love to see that happen with the build of 8 billion, whether it expands the brand. And eventually some people have asked what I'd like to do. I've met some amazing filmmakers. I'd love to do some of the stories for 8 billion. Just be more of a positive impact in this world, inspire others. So like I said, real estate will always be the family business, but on a really truly expanded part, I think I'd love to build the brand of 8 billion, share more inspiring stories and really help people with personal development and like their spiritual growth.
I love that. Yeah, I have no doubt about it. You will expand it, and that 8 billion will be a huge, huge success. So, I'll definitely be cheering for you on that one. I love what you're doing. Last question: what this show's all about? What exactly do people need to look for when buying and selling a home? And why should they choose Liza Florida as their real estate professional of choice? Even though we might have scared a lot of people, but
well, like I said, if you tuned into most of this podcast and you made it to the very end, you'll know that there's so many moving factors in each space. What you want to do is, definitely when you're looking for, if you're a seller and you're looking for someone to represent you, interview people, like understand, the depth of their knowledge and where, like the questions that they ask you in order and feel comfortable with it. Like things, what was the other question? What you should know when buying and selling a home?
Yeah, what to look for when buying and selling a home, and why should they choose you as their real estate professional of choice?
Well, I do want to say, like, as much as, and like I said, okay, if you're here in Southern California, please feel free to always give me a call. What my family and I pride ourselves on is truly the connection and the relationship that we build. So we sit down, we dive deep with you, we find out what your current situation is, whether you're looking to buy, whether you're looking to sell, and what your future plans hold for you. And so what we do is we try and set up a game plan for you. We try and guide you the best way that we know how based on the knowledge that we have. And like I said, we look to not just use the relationship as a transactional basis, but to build truly like long-lasting relationships where you can come to us at any point and just even ask questions if you need feedback,
Love it. Yeah, Liza, this has been amazing. I'm glad I could return the favor and have you on. I mean, I'm glad I had you on. This has been really good. A lot of great stuff, facts, everything that I know you're a professional in this side of things too. We didn't mean to scare you if you are listening, because there's still opportunity out there as always. It's just, it was a great discussion to have. Obviously, I'd love to have you on again. We'll do a follow-up to this show as well. And if anybody has questions in this audience, please feel free to reach out to me or Liza anytime. So where can they reach out to you and connect with you? That's the most important thing. And then also, where's your podcast? How can they find you there?
Yes. So I am on all social media platforms so that I'm on LinkedIn, Instagram, and Facebook as Liza Florida. So that's Liza. So like Liza Minnelli, Florida, like the state. And then you can also go on my podcast website, which would be www.8billionproject.com. And 8 is spelled out. So it's EIGHT. I'll forward all of this stuff to Bill, so you can probably put it on the description. And then in about another week or so, I am actually officially launching LizaFlorida.com. So it'll have the whole brand of everything that I'm doing, from real estate to the podcast to speaking and teaching. So that's going to be very exciting. I'm about a week out from launching that.
You are staying busy. Good for you.
We have a whole world to save, Bill.
Yes, we do. And we're starting with your podcast and now mine. We're saving the world.
Yes,
So no.
Yeah, you think we do real estate, but we're disguised as realtors.
That's true. Superheroes. That's what we are. So no, Lisa, this has been awesome. I really do appreciate you coming on. Obviously, everybody listening, thank you guys for listening. As always, 2 seconds. That's all it takes. Leave me a comment on iTunes. This is the best podcast in the world. And then also 5 stars only, because that's all it'll allow you to do, I hope. And then also subscribe, like on YouTube. I appreciate everybody that listens to this show. Lisa, thank you for coming on. And I will see you guys on the next episode.